Hello and welcome to this SLFRF demonstration on how to report obligations of your SLFRF funds. The recent updates to the July 2024 SLFRF Project and Expenditure Report user guide are covered in this demonstration are 1, how to report certain types of obligations in the Treasury portal, 2, case studies for reporting obligations, and 3rd, useful resources. Now, before diving into obligation reporting, let's have a quick refresher of what an obligation is. So Treasury defines obligation as, quote, an order placed for property and services and entering into contracts, subawards, and similar transactions that require payment, end quote. An obligation is also a requirement under federal law or regulation or provision of the SLFRF award terms and agreements, to which the recipient becomes subject as a result of receiving or expending SLFRF funds. A similar transaction that requires payment may include certain interagency agreements or personnel expenses like payroll. That said, an obligation is not budget, an appropriation of SLFRF funds, an executive order, a written or oral intention to enter into a contract, or a claim of funds under revenue loss category. For further clarifications about the definition of obligation, see the SLFRF obligation webinar slide deck and recording, as well as section 17 of the SLFRF FAQs. You can find these important resources linked below in the description under this video or on the SLFRF website. Additionally, you can watch the SLFRF webinar titled Updated FAQs on Obligations and read the July 2024 Project and Expenditure Report user guide for more information to understand how to successfully report your obligations for the December 31st, 2024 deadline. Now let's discuss the new updates to the Project and Expenditure Report user guide and how they can inform your obligation reporting process. So the first item we'd like to run through is how to report costs associated with satisfying certain legal and administrative requirements of the SLFRF program after December 31st, 2024. So a new subcategory has been added to the selection option for this as subcategory 7.3, and we have an example to demonstrate this. The first is as follows. So the scenario is, for the past 3 years, a county government has paid Auditor Incorporated to complete its single audits. However, the county board has a policy of changing auditing firms for every 3 years, and the county's current contract with Auditor Incorporated runs through 2025, but a new firm will be awarded the contract for 2026. So the county wants to use SLFRF funding for the cost of its single audit in 2026. Stephanie, I'm going to pass it over to you to discuss this in more depth.
Hi, everyone. So the challenge here is, how can the county obligate funding for its single audit cost in 2026 if it doesn't have a contract in place by December 31st, 2024? The solution here is the county and all other SLFRF recipients are considered to have incurred an obligation by the obligation deadline to comply with the single audit requirement imposed through each recipient's award terms. The county may use expenditure category 7.3 to report the obligation for funds expended after the obligation deadline has passed. The county can enter an estimate for its single audit cost into expenditure category 7.3 by the deadline discussed in FAQ 17.12. And by providing the estimate, the county will not have to return the funds included in the estimate to Treasury after 2024, assuming that they are ultimately expended for an eligible purpose. Please refer to FAQs 1710 through 1713 for more information. But now I'm going to share my screen and do an example of this scenario. When you enter your portal and you're in your report, you will want to go to your project overview section. Here you can add a new project. We are going to choose the expenditure category 7 and then use the subcategory of 7.3 as mentioned. For this scenario, we are going to create a project called Admin Cost 2025 through 2026. Again, this is a project name that you would determine. You would then create your recipient or your recipient project ID. Again, something that you choose as a recipient. And then you would determine your budget if you are a tier 1, or you are also eligible to do that if you are not a tier 1, but it is not required. And then you want to establish the amount for your obligation. For here, we are going to do $1 million scenario. At this time, we have not expended anything. It is for our estimate purpose. Because this project could have started at this time, you will need to choose your completion status. And based on that, you'll want to enter the information for the project start, which we are going to say happens January 1st, 2025. And project end date, December 31st, 2026. From there, you'll answer the question that asks the estimated expenses to cover the relevant legal and administrative requirements for SLFRF in 2025 and 2026 award closeout. Your estimated amount is $1 million for this scenario. Then you will need to enter in the actual funds expended to cover the eligible administrative and legal expenses. At this time, we have no expenses. Next, we would want to fill in an explanation for what the project was for. And this is a description of the eligible administrative and legal costs as discussed in Part 2B of the SLFRF Compliance and Reporting Guidance. And then you'll need to also provide an explanation to figure out the estimate funds required to cover the eligible administrative and legal cost and how it was determined. So you will need to also provide an explanation in this section as well. From there, you can add your project. And of course, every project will need a project description. Once you add your project, it will generate in your project summary below. And that is how you would complete adding a 7.3 project. Pass it back to you, James.
Thanks, Stephanie. That's really helpful. So the next item I'd like to run through is interagency agreements. As discussed in FAQ 17.6, so for interagency agreements, recipients will be required to attest that the agreement meets 3 requirements. First, that it sets forth specific requirements, such as scope of work and project deliverables. Second, that it's signed by both parties to the agreement, or otherwise evidences that each party has assented to the agreement. And third, and finally, that it does not disclaim any binding effect or state that it does not create rights or obligations. So recipients will also be asked to indicate which of the 3 following criteria the interagency agreement meets. First, it imposes conditions on the use of funds by the agency, department, or part of government receiving funds to carry out the program. Second, it governs the provision of funds from one agency, department, or part of government to another to carry out an eligible use of SLFRF funds. And or third, it governs the procurement of goods or services by one agency, department, or part of government from another. We have our second example to demonstrate how to actually do this in the portal. And the scenario is that a state's governor's office oversees a state's SLFRF award and has signed an interagency agreement, otherwise called an IAA, with its Workforce Development Program office to use SLFRF to pay for job training programming in 2025 and 2026. Stephanie, are you able to discuss this in a little bit more detail?
Yes, the challenge here is there really is no challenge. They just need to select a few of our selection boxes. The solution is the states will need to self-attest by selecting one of the options shown that the IAA meets the requirements listed. And so I will be sharing my screen again. And we will be moving over to the subawards and direct payments section within the portal. From here, you're going to have to enter some information. We'll start by entering in our project, name, and then next we will be moving forward to select the subrecipient name. And this is information that you would have entered in your subrecipient section. So your project information would have been a project established in the project overview section, and your subrecipient name will be what was established in your subrecipient section. From there, we'll start off by importing the place of performance for this IAA and filling out the location, the state, the zip code. From there, we're going to establish our sub-award number. This would be something that you, as a recipient, would determine, and it cannot be a duplicative of another number. In this section, this is where we are going to select the IAA as an entity type. This will help tie it back to your subrecipient as well. Next, you're going to select the subaward type. The interagency agreement is now located at the very bottom of this list. Once you enter that information, additional requests will be listed below. One thing to note with interagency agreements, you can't enter amounts that are less than $50,000 in this section. So we will enter a $5,000 award. Okay, and then we will establish the dates. We're going to set the subaward date of July 15th, and we're going to do a period of performance of July 15th through December 2026. One second, these are a little bit sometimes hard to gather. Okay, now we have established our performance period. Now we will go down to the 3 questions that James just read above. And these are the 3 basic conditions that the IA satisfies. For this example, we are going to choose option 1. It imposes conditions on the use of the funds by an agency, department, or part of a government receiving funds to carry out the program. And we are going to move that over to our selection box. Then as you scroll down, you will see the self-attestation section. that the IAA satisfies the other three requirements in FAQ 17.6. And the first one, it sets forth specific requirements such as a scope of work and project deliverables. 2, it is signed by the parties to the agreement or otherwise evidence that each party has assented to the agreement. And 3, it does not disclaim any binding effect or state that does not create rights or obligations. And so we are going to say, yes, we attest to this. And lastly, we're going to provide a brief description of what the subaward and the underlying eligible uses. And based off of our example, you're going to say the IAA with its Workforce Development Program Office to use SLFRF funds to pay for job training and programming for the July 15th through 2024 through December 31st, 2026. And then we are going to create this award. And as you can see, it has been created, now reflected at the bottom of our report. Thanks, James. I'm going to pass it back to you.
Thanks, Stephanie. Now let's move on to personnel cost estimates. So for projects involving personnel costs to be expended in 2025 and 2026, for positions established and filled by December 31st, 2024, recipients may report an estimate of such expenses to ensure funds remain available for those purposes. So recipients should only report an estimate of funds if they are not obligated for those personnel costs through another mechanism, such as through a subaward, a contract, or an interagency agreement. The estimate must be limited to estimated personnel costs associated with the individual project and may not include estimated costs associated with other projects. The example we'd like to demonstrate is as follows. So this scenario is that a city government has hired 2 business navigators by December 31st, 2024 to help members of the community navigate starting a business. The 2 full-time employees, or FTEs, are employed directly by the city, are to be employed through December 2026. Now, the city would like to use SLFRF funding for the payroll expenses of the 2 business navigator staff members through 2026 as contemplated by SLFRF FAQ 17.7. Stephanie, I'm going to pass it on to you to discuss this in more detail now.
Okay, so the challenge here is how can the city report the obligated payroll expenses in the portal? Our solution is the city should add a new direct payment entry in the subaward or direct payments section of the reporting portal. They can use the entry to enter estimated payroll expenses for these 2 employees, which will ensure that those funds are treated as obligated. This recipient will also have a list of the number of full-time equivalent, the FTE positions for which the funds are obligated, a brief description of the job categories covered by the estimate, and an explanation of how the estimate was determined. Take a look at pages 22 and 23 of our compliance and reporting guidance for further information about how to calculate these estimates. Please note that if you've already reported direct payments to city employees under a project, you will need to create a new direct payment entry specific for the estimate for the payroll expenses in 2025 and 2026. The direct payment entry can otherwise have the same identifying information as other entries, and you should give it its own subaward number. One way to do this would be to append a -A to the subaward number of the other direct payment to those employees. So for this example, I will share my screen. We are once again in the subaward and direct payments section of the portal. And here we are going to start out with our project for a direct payment. One second. And make this selection. There we go. Okay. And the subrecipient name will be what you establish in the subrecipient section, and the direct payment will be what was selected or created in your project overview section. You would first create your project, or it could be an existing project, and that will be your project name here. And then you would select the subrecipient associated. Just like last time, we are going to set up our place of performance information. And then we will select our subaward number. So because this is a direct payment, I am going to scroll down to the bottom and see that I already have a direct payment project. Its number is 654. So for this entry, I'm going to do 654-A because this will be my estimate. Then I'm going to continue with the entity type that would tie to the subrecipient you have selected. And then in your subaward type, you're going to scroll down and select direct payment. From there, we're going to fill out some additional information. Because we are giving it an estimate, we are going to select 0 for the current subaward obligation. And we are going to put in our dates that we are creating the subaward, as well as the performance period. Because this is for the 2025 and 2026 period, we are going to select future dates. So we will select January 1st, 2025 and December 31st, 2026. From there, you are asked a question. Will this project include 2025 and 2026 personnel cost estimates? We are saying yes. That will prompt for additional question. To the estimation personnel expenditures for 25 and 26 will be, for this example, $250,000. We have a 0 cost in expenditures at this time. You will also need to fill out the number of full-time equivalent workers, your FTE positions. For this scenario, we have 2 workers. In this explanation of how the estimate is determined, you want to fill out as much detailed information regarding your methodology there. And then in this last section, provide a brief description of the subaward and its underlying eligible use. And there you would want to be as descriptive as possible in the scenario. So the city will use SLFRF funds to cover payroll expenses for 2 business navigator staff members for the 2025 and 2026. Both business navigator positions will be estimated and fulfilled by December 31st, 2024. And then once that is done, you will create this direct payment. And see, at the bottom of your list, you see the direct payment test with your new award number has been created. Okay, James, I'm going to turn it back over to you.
Thanks, Stephanie. That's really helpful. So now I want to move on. For projects with a contract subaward type and for which the contract expressly provides for change orders and or contract contingencies, a recipient may also report an estimate of the amount that may be necessary to cover changes or contingencies in 2025 and 2026, and therefore retain funds that they would otherwise have to return to Treasury after 2024 as unobligated. This estimate must be limited to estimated costs associated with change orders or contingencies for the contracts associated with the individual project reported, and may not cover expected cost associated with other contracts reported under separate projects. So the estimate must be limited to these estimated costs associated with change orders or contingencies for the contracts associated with the individual project reported, and may not be expected costs associated with other contracts reported under separate projects. And the scenario that we have for the demo today for this piece is one we feel is typical of what some of you could encounter. The scenario is that a county government is using SLFRF to fund the construction of an affordable housing development. So the county's contract with its prime contractor specifies that the project cost is expected to be around $800K. However, the contract allows for change orders in the event that a project delay would make it impossible for the contractor to complete the contract at the original price. The recipient has experience with the particular prime contractor, and it believes that it is reasonable to set aside $200K for potential change orders. The county has obligated $800K for the project through the contract, but wishes to also obligate the $200K in project reserves so that funds can be used if needed after the passing of the obligation deadline. These increased costs are not considered new obligations, but instead attributable to pre-existing obligation to accommodate the change or contingency. Stephanie, I'm going to pass it off to you to discuss the challenge here and the solution.
Okay. The challenge here is, how can the county report the obligation of the $200,000 in reserves for this project? The solution is the city should add a new contract entry in the subawards and direct payment section of the reporting portal. It can use the entry to enter estimated expenses associated with the change order and contingencies for the original contract, which will ensure that these funds are treated as obligated. The recipient will also have to list the explanation of how the estimate was determined. And you can take a look at FAQ 17.16 in the SLFRF Compliance and Reporting Guidance for information about how to calculate this estimate. Please note that you will need to add a separate contract entry for the estimate of change order and contingency expenses in 25 and 26. And the entry may have the same identification information as a main contract entry, but as we did in direct payment, you also want to append that with a -A or something of your choosing to the subaward number, so that contract entry will have estimates to apply. So to do this, I'm going to share my screen again, and we are going to go back to the subaward and direct payment section within the portal. And once we are in this section, we are going to again fill out our existing project name. And this project has already been established. And then we are also going to identify our subrecipient. Again, something that we previously established. Here we will enter their place of performance information. And then after that, we are going to go back and create our subaward number. So again, we're going to look down below and see we already have our contract project listed here. Its identification number is 456. So to make sure that these say somewhat associated for our purposes, we will use 456-A. And then we will want to select the entity type associated with the subrecipient. These should match. And then in the subaward type, you will make one of these contract selections. There are 4 options for you. We are going to choose contract purchase order for this example. And here, like direct payments, we are doing an estimate, so we are going to enter 0 for the subaward amount. And then we are going to enter in our subaward date and then our period of performance. Just like we did with the direct payments, this is going to show our period of performance in the 25 and 26 period. And then once you enter that, you will scroll down and you will enter the estimated funds required to cover the change order. And that will be 200,000. And as you can see, because it is a future year expenditure, this area is grayed out for now. So in this section for the explanation, the estimates, we would like you to provide as much detail as possible in how you determined your estimates. And again, this information can be found in the compliance and reporting guidance to assist you in making that determination. And then again, you will want to provide a description for what this subaward and its underlying eligible uses are. And you would provide that information in this box. Once you are complete, you can create your new award, and you will see that it has populated here at the bottom. And now you have created your future year estimates. James, I'm going to turn it back to you.
Thanks so much, Stephanie. And thank you all for participating in this demonstration of SLFRF reporting updates and, obligation updates and reporting. So for more information regarding obligation reporting, we have an array of resources. Please see the SLFRF webinar titled Updated FAQs on Obligations, the obligation webinar slide deck, Section 17 of the SLFRF FAQs, the updated SLFRF compliance and reporting guidance, and the July 2024 project and expenditure report user guide. All of these materials should be linked below in the description of this video or on our website. For general inquiries, you can also visit our homepage at www.treasury.gov/SLFRF or email us at slfrf@treasury.gov. Thank you all, and I hope you have a wonderful day.